Hello and welcome to another Magnetic Weekly Index Review. My name is Cameron Malik. Today I'm going to be going over how to really understand market environment and the conditions that you're trading on a day-to-day basis. It's really important to understand those. They can lead to some common trading mistakes. We're going to give you some solutions to that as well. We're going to look at last week, what happened on the advisor service and what's been going on within that, and what we're looking out for next week, and we'll give you some trading tips on that. So let's just jump right into it. Understanding environment and conditions of the market is hugely important, and it's something which can be overlooked when you're trading. You may just be simply looking for a trading pattern to get in, but you must understand what kind of environment you are trading in. Now, two simple examples of environment are if we're in a trending market or a consolidating market. Those are the basics of the conditions and the environment, but we also want to go a little bit deeper than that and look at what zone we are in the market. There's three types of zones. We're either in a positive, neutral, or negative zone, and within that zone we have three positions as well. We're either at the high of perhaps a positive zone, a low of the positive zone, or we're just in the middle. So we need to take into account all of these elements to really understand the conditions which we are trading in on a day-to-day basis. So look, there's no better way than looking at this. Let's go over to the chart and have a look at the DAX of what conditions we've been facing over the last couple of weeks and this week. Okay, so looking at the chart, let's assess what the overall trend is. I like to do that from a mid-term perspective and a short-term perspective because those two things can be different. We're going to look back quite far just to show you a good example of an uptrend. This is clearly an uptrend here, but we're going back to the middle of June. An uptrend really can be defined by higher highs and higher lows. So we've got a higher high, higher low, higher high, higher low, higher high, higher low. So in the midterm, we're moving higher in the market. That was up until about just last week. And within that, we want to assess the zones which are positive, potentially negative, or neutral. So if I'm to look at this, and all of these levels were actually given on the DAX report, that when we were over here, I was saying while we're above 11,800, we're positive in the market with moves to 12,400. So we saw those moves come in. Actually, we saw that move taken out, and we remained above these levels. So if we're in this zone where we are positive above 11,800 and we are predicting a move higher to 12,400, and then I was saying, look, if 12,400 really breaks, we're going to go to 12,800. What do you think we want to do? You'd be right if you're thinking we want to buy. And if you remember from the slides that we also want to assess that this zone here is positive and it can move higher. So where do we want to buy? Do we want to buy at the top of the zone, the middle of the zone, or the bottom of the zone? Preferably, if we want to buy an uptrend in the market, we want to try to buy at the bottom of the zone. If we buy in the middle of the zone, we're adding more risk to our trading that we may have to get stops at a level where the market becomes negative. So where does the market come negative? In this example, I was saying while the market's above 11,800, we're still positive. So we want to get our stops ultimately below that if we do want to trade up higher to these levels. Equally, we need to be careful at the top of the range, of buying in at the top of the range here, because that's the top of the range. That's where we've predicted the market to go in the short term or medium term. Now the market might want to rest. It may want to consolidate, which it did here. It may want to pull back and retrace, which it did both. It actually broke out and pulled back. And we need to be very careful of fake out moves. That actually, if this came up here, touched the level, came back, and then yes, it can potentially go higher, but you can see it broke out again and just faked out, and really you would have to hold that trade for quite a considerable amount of time. So again, just really understanding where you're at. You're in a positive zone, but you're at the top of a positive zone, and the market may be exhausted, and it may want to consolidate there for a while and whip people in and out of trades. This is where a lot of money can be lost on stops, getting whipped in and out of a trade on a key level in the market. So the move we want to be in is this nice quick move, and then understand that it may consolidate. So hopefully that makes sense. Then let's have a look at what happened here. 12,400. Then the next move was to 12,800. So again, on the reports, really saying that while we're above 12,400, we've got to move to 12,800, which we did. Boom, consolidated, and then it came back to the bottom of the range here. So this is a great buy opportunity. Bottom of the range, we know potentially it's going to be negative if we start breaking through these 12,400. It's going to break this trend up, so we can look for buys and get stops below. And then beyond 12,800, again on the reports from the last weeks, was a move to 13,000, broke 13,000, then we have a move higher to 13,500. So you're always underpinning these levels and just understanding where we are potentially neutral, or positive or negative, and what those support areas are and those zones are in the market. So while we were above here, 13,000, we were calling a move to 13,500, but we broke 13,000 and moved back down to the 12,800. So let's just have a look at what happened there, and that's the action that we've been seeing this week. So we know the market's still positive above 12,800. However, if it does start breaking through there, there's very little support here, and it could drop to the 12,400 levels, which was the previous resistance, which then becomes support. So in this action here this week, I was saying while we're above 12,800, yep, we can move higher. However, we need to break 13,000 to confirm the move higher, and I don't want to get involved in this action. Why? Because if you came down here, you could get clipped out of a trade. We had no official trades for the DAX this week. You could get clipped out. Often the market, you've also got to be very, very careful around key levels that you give yourself enough room. Often retail traders are stopped out of trades and the market moves in their direction just because they didn't give it enough room. Market tests the level, pushes back up, tests it again, takes all the stops out and moves higher. But what we were seeing this week was the market just wasn't getting above 13,000, indicating that it's overall positive, but it's potentially weak. And we were calling actually that on Thursday or Friday that we could see a drop in the market, that the market may squeeze lower, take everybody out. And something that we'll talk about later is that it is the first trading day of the month on Monday, and we could see buyers really come into the market. So that's exactly what we saw. And also be aware that when a level like this is getting tested, it's been tested once, twice, 3 times, 4 times, just sitting on these levels, when it breaks, it can go very, very, very quickly. Often I like to see a level getting tested. And for myself, we just look at this level. On Friday, I was saying while the market can hold 12,730, it can still move higher. If it breaks that, we've got to move to 12,400. So these are on our reports every day. We do all of the heavy lifting, do all of the analysis for you for this. But this type of week will take a lot of people out of the market, and this type of move will wipe out a lot of people. The market dropped from 800 all the way down to 200, 600 points in the market. We'll go into some of those common trading mistakes, but the key thing here is really to understand what the market is potentially doing, where it is negative, where it is positive, and where it is neutral, and what type of strategies that you need to use in these different environments. We will use different trades in a trending environment to a consolidating and neutral environment, or perhaps a big trend to the downside. So you'll select the right tools for the environment. So hopefully that's helpful. Let's move on to some of those common trading mistakes. So firstly, as we've just gone over, not understanding the trading conditions and the zone of the market. If you are in a positive zone and you're trying to sell the market, you're really just banging your head against a brick wall. You're going in the wrong direction. It's overused, but the trend is your friend. So knowing when to sell the market in perhaps a negative zone, or knowing that if it breaks, really breaks one of those key levels, like I gave you an example just now, if it broke that 12,730, it's really negative and the market can move a lot lower, or you wait for the market to break that level and potentially get some kind of retrace. So just understanding the conditions of the market. The need to trade every day. Now, this does depend on your own particular strategy, but for myself, I normally have 1 to 2 very high probable trades every week. This week, I did not put an official trade out at all, and it's okay. We don't need to trade every day. We are like hunters. We are really like a sniper, just looking to target the right trade when the right conditions come along, and we'll take the trade. So really just getting into the habit of just being patient for the right trades to come along, and then they come along like buses. We'll have 3-4 trades in a row. This week, the market conditions did not suit trading, and we stayed safe in the market, and I guarantee you a number of people will have been taken out of the market this week. We'll talk about the advisor service a little bit later, but since we've been running the advisor service, a 70% overall hit rate on the trades, and the DAX trades that we've been taking are sitting at 100%. We've had no losses at all. So of course we will get a loss at some point, but it really is waiting patiently for those trades. It can be frustrating. Certainly it's very counterintuitive. It's almost like getting ready for work, getting on the train, going to the office, sitting down at your desk, grabbing your coffee, opening your computer. There is nothing to do for the day. So you sit there for 5-10 minutes and you go home. But that is what trading is, and that's what we did many times this week. Looked at the market, there's really nothing to trade. We put some alerts in for ourselves to let us know if certain areas will trigger us into a potential trade. Otherwise, we leave the market alone for ideal conditions to set up. A very, very obvious one is not using stops, not using stop losses in the market, not having a predefined target of where you're going to be targeting in the market, and a predefined stop. If you do not have a predefined stop, like that 600-point move in the DAX, which happened very, very quickly, you can very quickly get into some very hot water, or potentially, sadly, blow up your account. So making sure you've got a predefined risk that we typically risk about 1% on our trade. The stop loss could be different. It could be 30 points, it could be 100 points. It doesn't matter. But we know, as we showed you earlier, that if the market's going to go through this level, again, using the example of the DAX, if it went through 12,730, you are wrong in the trade. So if you're long in the market, you bought the market, you want your stops below that level, and you want to get your risk calculated correctly, that you're only risking 1% a trade. So that really does lead me on to the poor risk and leverage management. Often, sadly, we see that People over leverage, perhaps don't have a stop, maybe risking up to 5% of their account on a trade. They don't have a stop loss, and the market moves 600 points against them. And suddenly their dreams of trading have quickly disappeared. So don't fall into that. Calculate your risk, calculate your leverage correctly, that you're only risking 1 to 2% trade. It's fine to risk up to probably 4% a trade if you have a smaller account. As I say, typically we risk 1% trade on our account, but we have a larger account. So these are perhaps obvious things to have stops, risk management, and leverage correct, but unfortunately the old common sense is not always common practice. So make sure that you really get these in place. Perhaps have a checklist before you place any trades, that you've calculated how much of a dollar value is your risk, what's your 1%. So say for example on a $10,000 account, your risk would be $100. So if you've got a stop of 10 points, then you're going to be $10 a point on that trade. So you're not going to lose more than you have already predefined. And that goes for the wins as well, that sometimes people over leverage incorrectly, or they don't leverage the same amount on every trade. You've got to put the same amount on every single trade, because we don't know which trades are going to be the winners and losers. But what we do know, probability, is that we're 7 trades out of 10 we are going to win. So we get our leverage the same, risk the same every time, and make sure you get a stop loss in place. All right, let's go over now. I've mentioned a little bit about the advisor service this week. We didn't have any official trades. Overall, since we've launched the advisor service, we are at a 70% success rate. As I say, with DAX trades at the moment, having no losses. But we're going to go over to Mark, who's going to show you one of the potential trades that we were looking at.
Okay folks, it's Mark from Magnetic Trading here. So today we're going to be going over a trade that we took in our live room on Friday and some tips on risk management. So the live room is where we meet our clients each day in a webinar environment, and we trade in front of them live. So they hear our commentary and they basically follow the trades that we are taking. We trade for about 20 minutes. Why 20 minutes? Well, that is the time when the market is most volatile on the DAX and the FTSE. So it opens, and that 20-minute window is an area that we've really harnessed and focused our skills over a number of years now. So it really is our niche market, and we often take a trade during those 20 minutes. And it's generally low risk as well, which means we're not risking much, and we're trying to make 1 to 1 out of the market. So if we're risking 1 or 10 points, we aim to make 10 points as well. We also aim to lose a very small if we get it wrong. So on Friday, what had happened is Thursday had created a big sell signal in the market. So a technical level had been broken. So we were expecting further downside, further selling pressure on the day. So we opened. This is a 1-minute chart, and this is a chart that I like to use on the FTSE. It's not very good on the DAX or the Dow Jones, but on the FTSE and also probably on the ASX, the ASX and the FTSE are lower volatile markets, so they move slower. So if you're looking for short-term trades, the 1 minute is often nice. It's a nice time frame to use. So on Friday we had a level known as the pivot level, and that was at 6020. So we deemed that the market was likely to sell off below that level. So what we decided to do is we decided to take a 1 minute bar break. This candlestick here represents 1 minute of action. And what we said is if it breaks, we'll get short, we'll put our stop above 6020, and initially we'll look for 1 to 1. So we're risking about 15 points on this trade. We need this trade down to 59.90. Now at 59.90, this is an area where we said we would take half profit. So what that means is if we sold, say, $10 in the market, we would buy back $5 at this point. So at 59.90, we've locked in 15 points of profit. We then use that profit to pay for our stop just above 6020, which means that if the market moves up to here and stops us out, we've basically lost nothing, but we've also made nothing. But the key thing is the trade went wrong and we haven't lost anything. So that's what we did. We basically instructed clients to take half profits here, and then we were looking for a target down at 59.60. Now the other option here as well, if you're doing these types of trades with us, is you just look for one-to-one. So if you're risking 15 points, then you can just target 15 points, which actually in this trade you would have made one-to-one. Now we average 70% hit rate here at Magnetic Trading. So if you're winning 70% of the time and you're getting one-to-one in your trade, then you're making good money. Okay, so let's just have a look at what we're looking for going into next week as well. Okay, so this is actually the report that we sent out to our clients, or they access it in the live trading room, and they had this on Friday morning before the market opened. So in this particular report, we're already telling them that we're looking for this area to sell at 6050 to 6090 is a nice sell area. So actually the market hit 6049 on Friday, so just missed that sell area, a little bit unlucky. But we're basically saying that below 6050, the market is likely to move down to 5880. And actually this level I like as a buy. So before the market even opens, we know where we're looking to sell and we know where we're looking to buy. So let's just have a look at the price action on Friday. Okay, we're now looking at a 5-minute chart here. So each candlestick represents 5 minutes of action. So the market opens on this candlestick here. You can see it moves up to 6049, just 1 point away from our sell zone, and then it sells off. And now remember, our target for the sell-off was down at 5880, and then we were looking for a buy. So the market has pushed down and it's hit this level at 5880. So we're actually looking for a buy there with a stop below 5800. We're looking for a further target, but actually for you guys next week, I would look for a nice buy down towards 5820 and lower with your stops below 5700, and look for a good 100 to 150 points of profit. So that's valid going into Monday, Tuesday, Wednesday. Really, we'll see how the markets act, but that's a nice area to buy, is down towards 5820 with your stops below 5700, and look for that 100 to 150 points. So that's how we traded the market on Friday. That's what our reports look like, and you saw how we manage one of our live room trades using that 1 minute. So if you trade the FTSE actively, I would recommend looking at that 1 minute bar for those first 15 minutes of action, because you can get some nice low risk, high profit trades in the market environment.
Okay, thanks for that, Mark. Now let's have a look at what's potentially going to happen in the DAX this coming week. Now we're just going over the weekend. First trading day of the month is on Monday. Should we see some kind of drop in the market over the weekend towards 11,800 levels, I do think that is going to be a good buy, that we're going to see some kind of reaction. And if we're staying above those levels, I do think we're going to move back to the 12,400 levels. Now that's if we do see a drop. If we do start opening above 12,400 and we are holding, then I think the first move for us is up to the 12,800, and then beyond 12,800 to 13,000. So that's what I'm expecting this week. If we do start breaking the 11,800 levels though, we're going to be pretty negative in the market, with expecting lower pricing over the week. So I hope you've enjoyed the index review this week. We'll be back again next week with more trading education, trading tips, and the overall view of the market for the following week.